pretty much every influencer you've seen online is now somehow affiliated or has their own prop firm because of the fact that they can leverage their audience and they can push people through this channel that can be highly profitable based off the models of, say, FTMO that made $100 million in earnings before interest and dividends tax last financial year, which was huge. I mean, that's more than most brokers make. As you've opened up social media, every other week there's another prop firm that's shutting down. There's 6 or 7 brokers I've seen in the last few months that have all set up funded element to their business. What I do expect is some sort of regulation. Now, there's already whispers of it through the European regulators via ESMA. Right now, there is an argument to classify props as a worst case scenario, similar level as binary options. Now, if they do that, that would form an element of props being.
All right, folks, here we are on Trading Up. We've got Anish Lal back in the house from Black Bull. We're about to dive in and talk about how brokers are joining the prop firm game. We're going to go really deep into that. Anish works for Black Bull, which is obviously a broker in the space. He's worked with prop firms before as well. So really good guy to get an insight into this and how that can impact you as a retail trader looking to get into a prop firm. So, but before we dive into that part, what we want to do is jump back a little bit and have a look at the last year, I suppose, in that prop firm space and just get your impartial, independent view on what's gone on, the firms that have closed and everything else that's gone on, like the dramas that just keep unraveling and the regulation that keeps being added to that space and changes with MT5 and all that sort of stuff. So let's go a year back and your view on what's happened and how this may have affected other people out there in the industry, the retail traders that are thinking, well, where do I go now? That kind of thing.
Yeah. Firstly, thanks, Cam. Pleasure to be back on the Trading Nut podcast. Thank you for having me. Over the last 12 months has been quite exciting, quite the thriller for anyone following the prop firm space. Of course, we've been quite in the middle of it all with regards to servicing prop firms from 12 months ago to now where we do not. And of course, in the early stages of this year, all brokers that were using MetaTrader 5 or 4 as a bridge tool or the platform tool for prop firms to integrate with, pretty much sent out a letter and said, hey, we're going to seize your server. You're going to terminate your server and your license if you continue to service prop firms. Essentially, they cited a clause in their contract where one would be issuing grey labels without permission. So that's how they classified it as a grey label. MT5. Essentially, what we were doing was providing a demo server access to the prop firms to integrate their backends with. They would create accounts, put the challenge thresholds in, and it would actually operate seamlessly. The beauty of MetaTrader tech is that the APIs are above par in terms of competition, in terms of what's out there, and we'll get into the latter platforms after that. But essentially, that notice around brokers caused scare, and we weren't the only ones, but we had to have a hard shut door policy on the prop firms that we were servicing. One particular one, I'm sure you guys would know it without saying any names. I mean, they were huge. They had nearly 10,000 accounts that they had generated within a very short space of time. And we're using our server. We had provided them with a dedicated server and support services, and it was working great. Great for us as a broker as well to help get our name out for branding and for the prop firm to have a technology partner that works seamlessly well. So essentially, it came to an end. The reason behind it, one can speculate, but according to a lot of commentators out there and people that we speak with in the legal space, MetaTrader had an ongoing suit for US clients for onboarding US clients and being the platform to provide that.
Now, if you're loving the show and thinking, where can I go and trade? Why don't you check out my prop firm sponsor, Blue Guardian. Now, these guys have been around for ages. They've been sponsoring Trading Up for over a year. And some of the key features that make them so good is that they've got realistic profit targets for their challenge phases. It's only 8 or 4%. They also have a scaling plan up to $2 million, and they do profit splits of 85%, which is really high for this industry. They also have quick and reliable payouts and a robust reserve that make sure those payouts are as seamless and smooth as possible. Now, if you're looking to join, go and check them out. But first, grab my coupon code TradingNut, all one word. You're going to save yourself 25% off at checkout. There's a link in the description. Go and click that now. Right, let's get back on with the show.
So there's a lot of, that spurs on from, of course, what happened with Traders Domain, and MetaTrader 5 was the platform. So unfortunately, it's been indicated within a lot of these lawsuits. And then when prop firms started gaining traction in the US, it was a hard no. And then, of course, that gave the rise to futures prop firms. And the rule generally followed by most props is that no US clients are allowed to trade CFD products. So the last 12 months has been quite interesting. Quite interesting if you're on Twitter and X, because there's no regulator. The commentators on X and are the ones where you get your news from. And it's all quite exciting because it's highly engaging and there's a lot happening. It's a lot of theatrics within different prop firms. And then after that, I guess when MetaTrader or MetaQuotes forced brokers to turn off their or exercise that right to shut off props, you saw the emergence of the likes of CTrader, DXTrade, MatchTrader, TradeLocker, all immediately, pretty much the day after, capitalize and post, the fact that they were assisting props to set up, which is, the way the world works in ingenious marketing, if you can hack it, and of course attract all of the other prop firm interest to get set up. Now, just some insider information, which is quite interesting. When we first started in that space, we really didn't know how to price the product, in terms of some brokers that were providing this were charging per account. Some were charging horrendous fees for monthly costs. We had a very low barrier to entry, and we only actually worked primarily with one main partner. And it was a very low cost of entry. We understood the branding side of it, and that's where we made most of our money. We offset a lot of our our cost revenue calculations on the base of that branding that we got from it. So it was very, very low. But then when MetaTrader shut off, you see a lot of these platforms like CTrader, DX, TradeLocker, MatchTrade, they charge pretty hefty setup fees and then the monthly fees. Some of them have revenue share splits. So it's an interesting dynamic on how the back-end technology works, because they pretty much have ready-made solutions. And it's quite a low barrier to entry, I would say, for one to set up there. So what we have seen in the last 12 months with this low barrier to entry, pretty much every influencer you've seen online is now somehow affiliated or has their own prop firm. Because of the fact that they can leverage their audience and they can push people through this channel that can be highly profitable based off the models of, say, FTMO that made $100 million in earnings before interest and dividends tax last financial year, which was huge. I mean, that's more than most brokers make, and that's in US dollars. So it's a humongous figure.
It is huge, yeah. And I'm a thing on the back of my Forex funds. I think they were up 300 million.
That's right. Well,
when they went down, which was ridiculous.
So I believe they had $455 million seized by the CFTC. Right. And from my understanding, the latest updates as of earlier this year is that number's come down a bit, and they might be looking to re-enter the space. But it just shows you, in terms of a short-term period of time, how much money could be made. So it's quite attractive if you do have an audience that you can push people into the path. But it's all very well, good and easily said that this model works in such a beautiful way, but the realities of it are quite different, especially as the space has evolved. A lot more participants are in the space. And ironically enough, it's created an era or larger group of profitable traders, and we're seeing that as well translate into into our books, we service well over 25,000 active traders, and the newer generation of traders who have perhaps already traded on a prop firm now have that innate discipline in regards to risk management, and overall, if they have a long-term outlook on it, are able to make money over the long term. So
and I suppose the other thing is they probably made profit on the prop firm that they brought across the likes of yourself to go, well, if I've made this $10,000, which is all profit, and I can now feel confident trading it. And if I lose it, then it's all profit. I could probably go back to square one and do the prop firm thing again, get the capital to trade it again. So it's a nice synergy there. Yeah.
You would say a lot of the people traditionally that would go on a demo account now are able to say have $100 or $200 to enter a challenge and build their skills. So for the traders, I'm firmly of the opinion that there are a lot of advantages to such models. However, your counterparty risk is where your main risks are. And that's what we've seen over the last 12 months. As you've opened up social media, every other week, there's another prop firm that's shutting down. And what's the reason for that? Well, it could be various factors. Main ones could be the fact that they're just not well capitalized, poor management, poor risk management systems, not the right people in the back of it, greedy owners who might have a very short-term outlook and an exit number. That's what my assumption is on the latter, that a lot of these people running these firms are not vetted. They're not approved by any regulator. They're not audited. God knows where the money goes. A lot of what you are tending to see as well with a lot of these props are the amount of complaints that are online in terms of payouts being denied. And the terms and conditions are written as such, which are very restrictive for traders. For example, if they've made money from what's deemed as arbitrage or news trading, or if they've used certain strategies which are not permitted. And the terms are written very ambiguously for the purpose of the props essentially keeping as much in their pot as possible. So if I was an owner of a prop, you'd be going in every month with a budget for payouts, essentially. And if you've crossed that budget, then that's when things can start to get a bit shaky and a bit shady. And that's why you generally would tend to see this. And the primary reason is because of capitalization. So hence why people will flock to a few. Consolidation will probably happen, and then brokers entering the space, essentially the big boys, if you like, who have capital controls in place and are able to translate some of their regulated business into the prop space. However, overall, it is still very much new territory. So the fact is, will there be an element of unknown? Because at the end of the day, it's still essentially a gamified product. It's a challenge account. There's no regulation around it. It will be interesting to see the number of complaints as a barometer for how well they do. Overall, I think the model will work because they have the audience existing there. And as a cross-sell product for one that would normally enter a demo journey to now go down the prop firm space within their own technology is quite a synergy, because they don't have any additional platform costs. There may be additional development work on the back end and training internally. But overall, it probably makes sense for brokers to enter the space and have a division. There's 6 or 7 brokers I've seen in the last few months that have all set up a new funded element or capital funded element to their business. So it's been quite interesting.
Do you know why it's taken so long? Because it's the online prop firm game has been around for a long time, and as you mentioned, low barrier to entry. These brokers are kind of basically set up anyway to do it. Why is it taking them so long to start thinking about even start like releasing this as a product? Have you got any idea in terms of what put them off in the short term, when they obviously knew through news and information leaks that these prop firms are making, as per your quote, more than some brokers?
Yeah, it's a great question. So, I mean, brokers are generally quite conservative, especially in terms of, their business to protect, and the reputational risk is huge. So for a broker to enter an unregulated part of the market as a product, there is generally a risk element there. So, for example, our opinion was to sit on the sidelines and wait to see what happened with other prop firms that were operating in the space. And as expected, we've seen props go down, we've seen consolidation, we've seen the strongest survive, essentially. However, we are seeing a growing interest for the space. So, like I said, where you would have a larger influx or larger flow for demo users, you're now seeing a reduction in demo users and ones going straight into the prop firm space. So the new trader is now more likely to open up a prop firm account than a live CFD trading account. That's not to say the second or third stage for them is to then go into a live CFD environment, as you said, with their profit share. But my opinion is then once one broker goes, the rest follow. And then what they've seen is, not wanting to miss out on the space. Everyone wants to exhibit at the expos and showing this brand new product, which essentially has been running since 2018 and pioneered mainly by FTMO, who are now offering this. So then you've got brokers competing with the tech providers, and then the tech providers might worry that brokers taking over this space is going to defeat the everyday influencer who wants to get involved. And the everyday influencer will now start to ask the question, is it more appropriate for them to set up their own prop, or should they just be an affiliate with a broker at a very favorable rate? So it's all quite interesting. I think over the last 12 months, we've seen it rapidly evolve. We've seen Twitter or X Court in full affirmation in terms of discussions and people going onto X to complain. Essentially, it's quite bad form, because you're seeing a lot of nasty behavior online with CEOs to their detriment or to their favor are quite transparent and quite reachable, or the prop firm CEOs, which is an interesting, again, for the viewer to see. But they get called out every day pretty much on things that are going wrong. Now in the everyday world, in brokerages, you can't really do that on Twitter or X. If you do have a complaint, there are complaint handling policies, dispute handling policies that brokers have that push people down certain paths. First, it allows for, say, an internal investigation, then it goes to a third party, then it goes to the regulator. So these are processes that have been mapped out. And one of the disadvantages of dealing with a prop, if you say your payout is denied, you've really got no form of recourse unless you take legal action, which can be quite costly. And then you've got to weigh up what do I do at this stage? So it's quite easy to go and complain on an online forum.
Yeah, and possibly get if the crowd sort of gets behind you, you can possibly get your payout or whatever it is, because the firm just gets pressured into it. Or whereas I suppose with a broker, it's going to be very hard to go down that route, because you're just not going to be as active in that space. Talking to Joe Blogs trader who's just been denied a payout.
Yeah, exactly.
On Twitter. Now, do you think there's I suppose brokers have an advantage in terms of they've seen so many traders go through, they've probably got, I'm guessing you've got or maybe have algorithms in the background going, this guy's a good trader, or this is what a good trader looks like. Do you think they'll be able to sort of quicker take somebody who goes through, passes a challenge, and put them onto a live copy account? So they're actually copying those trades live and doing what you'd expect the prop firm to do versus, just going, well, we'll pay out these guys. They're eventually going to blow their account once they get funded, or some of them will. There'll be a small percentage that won't. So we'll just sort of manage it that way, as opposed to knowing that this is a good trader from the outset. We've seen enough data and enough trades to be able to go, let's put them on an A-book.
Mm-hmm. Exactly. That's a fantastic point, because the question is, how many props currently risk manage appropriately? And essentially what I mean by that is the points you touch on. If there is a profitable trader, in an ideal world, you want to STP that trader, as in you'd send it to the market. The general model of props from outside looking in, depending on the scale, I would say small to medium sized ones, or ones that have just started up, they're going to house all the risk. So they're going to rely on traders to blow up before their challenges. And if there is a profitable trader, they might put aside some funds to pay them out from the challenges that have already been purchased. So it's kind of a model of recycling funds from the challenge payout from the challenges bought to the payouts. Now, how scalable is that model? I'm not sure. When you're promising clients or users that they will get funded at a certain stage, and the idea of scalability up to millions of dollars, that model then becomes questionable, because one would need to have investment and resources, personnel, risk managers sitting down 24 hours watching traders and essentially risk managing according to a set of rules. Now, how many props have that? I'm not sure. So if you're very profitable and you want to trade profitably and scale up with a prop, those are questions that you need to ask. And that's where I think the brokerage space entering the prop firm industry will add a layer of skill set. And that's from a risk management point of view, because they already have the processes in place. They already have the liquidity, the technology, and the bridging tools to start creating rules for profitable traders. And that's to create an efficient business model. Essentially, what it means for the broker is that if the trader is profitable, there is absolutely no conflict of interest. That means the trader's sent to the market, whatever commissions are paid are the broker's revenue, essentially. So that's where I think that layer of expertise entering into that space will add a buffer layer of kind of longevity for the product space. However, again, saying all of this, there's still no regulatory eye over anything, and brokers are, not unknown to have malpractice within their company. They're not the perfect model, but they're a bit of more of a shinier suit, I would say, than a prop firm CEO. That's what we'll put it down to.
Well, that makes sense. Now, it's funny because I met a guy at one of your Black Bull events, actually, he ran a copy trade service in, I believe it was Germany. I don't know if you remember the guy, but he was saying that, like, I remember talking to him, and he goes, I wouldn't put money behind any trader unless they've, proven over 6 months minimum that they could be profitable. He goes, even like 4 months, 3, 4. He goes, I've seen traders be great for 3, 4 months and then fall over. Is 6 months, in your opinion, does that seem too long? Would you typically be able to go, look, after a month or two, I can tell that this guy's going to be good, and this trader, based on these stats, would be likely to carry on and be profitable into the future?
Yeah, as a general proxy, if I was an investor, firstly, you'd have to ask yourself how much you'd want to put in. If it's a sizable amount, you'd be wanting to see at least a year, in my opinion. And the reason is because within a year time frame, you have several market cycles in FX. And generally, if you're operating one strategy, it's important to see how it handles those market cycles. For example, the recent buying in the Japanese yen, the sell-off in the stock market, the rally in gold. How does a strategy handle all of these market cycles? Effectively, they're all bound by fundamental economics, changing interest rates. Last week we had an NFP, a real bad number for NFP, a rise in unemployment. How is it going to respond to all these changing economic factors? And generally, a strategy for 12 months minimum is a good barometer to see how the drawdown is through those 12 months, kind of comparing it with different economic events that happen, market cycles. Say if there's a huge drawdown, kind of understanding what the reason was for that, and then looking to potentially copy. But copy trading, though, is also quite risky in terms of, some platforms like ours, you can set your risk parameters. Others, you just go one for one. So in that secondary state, you have more risk when you are copying someone. Some copy traders don't allow you to exit as well, or close trades manually. So those types of things you've got to consider when you are copying. But yeah, I would personally say 12 months. I know People like to look at a short-term period. If you are looking at a short-term period, it's important to know what your exit clauses are. So if you can exit trades, if you can close them yourself, or try to put down some risk parameters within that, then that's probably the way forward.
Yeah, I did actually use your copy trade service just the other day, and it was the risk parameters were pretty good. I think that you had like a maximum loss limit where you could just deactivate the or you stop copying the trades, all this sort of stuff in there. So it was very well done, and obviously gives the person copying a lot more control as well.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
Right, we'll dive into the last question here, Anish. So, like, where do you think prop firms are going? What's going to happen the next year, maybe 10 years, well, maybe not that far, maybe 5 years, and over the next 12 months?
Yeah, great question. So, I mean, look, we're at a stage now where we've seen huge amounts of users of the prop firm space on both the user side and the given the ease of creating a prop firm, there are a lot of options out there at the moment, all offering, a similar product. The main differentiation point is probably the platform they use. What we will probably see is more consolidation. I do believe that there are still prop firms out there that probably have a higher risk element than others based on the points that we discussed earlier, capitalization being the main one. I think you'll see a larger amount of traders become profitable, become more savvy, and start navigating through those prop firms, interchanging prop firms and going from one to the other to spread out their risk and continue to make money. And, God bless them. Good luck. They've done extremely well. And I hope they can, spread their knowledge to others. What I do expect is some sort of regulation. Now, there's already whispers of it through the European regulators via ESMA. Right now, there is an argument to classify props as a worst-case scenario in a similar level as binary options. Now, if they do that, that would form an element of props being blacklisted. Now, the swinging pendulum for the regulator will be around complaints. So there is a big thing with the FCA right now with how they've treated leverage and FX trading with CFDs is calling it a gamified product. And they want brokers, there's a big push from tier one regulators to avoid gamifying their product. What that means is no bonuses. That means offering very low leverage. That means offering, limits around trading, for example, more risk limits, lower leverage on certain assets, going even down from 30 to 1, and changes to professional client statuses as well, make it more harder or difficult for you to become a professional client. What you've seen, for example, since ASIC introduced leverage cuts, leverage caps, there was a clear-cut route towards becoming a professional trader. 12 months of trading, X amount of net worth, a declaration form, and you're done. So ASIC brokers went through a whole process of professionalizing their top traders. Those steps will probably become more difficult. So we're talking about an extension of things that regulators are already discussing. And my fear is that props or the prop challenge space will enter into the gamified product area, which is a large area of concern. And regulators in their self already have kind of a red eye when it comes to brokers. As you've seen over the last 5 to 10 years, there's been several changes which have dictated the future and have, as we're seeing also with the FMA looking to make changes, so eventually it's pushed a lot of people offshore. A lot of traders have been sent to offshore entities of brokers that can offer that higher leverage. That, of course, comes with higher risk. And the prop firm space has evolved. as a function of that as well. So essentially, it's just a demo account that one is trading on, or a simulated live account. If this pendulum swings towards the very risk-averse sense, then you might see props being blacklisted as a gamified product. What that means is that for props, they could probably still operate. But they may need some sort of regulatory approval, or it just forces them offshore. And it also means that it's going to be very difficult for PSPs to deal with them. So payment service providers. It probably means that everything will probably have to be done in crypto. If they've got Visa, MasterCard attached to their business, their fees will be astronomical. You're talking about 5, 6, 7, 8% plus. So that's what I think. It will probably be a lot more difficult to operate in that space.
What for the trader listening, I mean, thinking, damn, I don't want this to happen. I mean, this is something good for me, even though the risk that comes with it. I mean, is there anything a retail trader listening to this thinking, I don't want to lose prop firms, I don't want to lose leverage? What can they do?
Their saving grace is the fact that probably brokers entering the space may be able to alleviate some of the concerns. If brokers entering the space bring about structure and reduce the overall number of complaints and scams, as it were, then it might help. My suggestion, if I was a prop trader, would be to probably pick the largest, the biggest props instead of newer ones that are up and coming. The assumption is that they have more capital. The assumption is that they have more experience, better support teams. That as the main choosing factor would probably be the direction.
Right, and with that comes, I suppose, less complaints, and then therefore, less of the authorities thinking, well, hang on a second, we've got a problem here to fix that we need to fix.
Exactly, yeah. Because if it continues as it goes with every other month the prop firm shutting down, that comes with a group of clients that have not been paid out, and essentially a group that will complain. Yeah. So
okay. Well, there you have it, folks. Well, look, Anish, it's been great to get you back on. I'm sure we'll do this again and maybe talk about some other topics, or when something hot comes up, we'll bring you back on. For now, I suppose, folks, if you do want to find out more from Anish, what's the best place for them to go?
Right, you can come onto blackbull.com or send me an email directly, a.lal, L-A-L, @blackbull.com. Happy
Brilliant,
to
folks.
Talk to anyone. Yeah.
Superb. Well, what we'll do, folks, is we'll hook a link up below this to Anish's page on Trading Nut. All those links will be over there as well. Until next time, I wish you all the best in the markets. Thanks for watching.
Thanks, Cam.